بسم الله الرحمن الرحيم
نحمده ونصلي على رسوله الكريم أما بعد رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Assalamu alaikum, dear brothers and sisters. In our previous video, we spoke about what finance really is and how Islam views wealth as trust, not just personal property. So if you haven't seen that video, the link is in the description of the previous video. Have a check on that. So today we'll go deeper to understand the fundamentals and technical structure of Islamic finance. So Islamic finance is built on ethics, fairness, and responsibility. So these are three very basic and important aspects, I would say. It's not only about avoiding the interest, it's about promoting justice in every single transaction that we do. So let's have a view on Quran first. That's where we start from. So the Quran in Surah Al-Baqarah, that's 275 verse, chapter 2. So Allah states in Quran that Allah has permitted trade and forbidden riba, that's interest, which means you are allowed to trade, but you'll have to avoid interest. Trading, since I give you money, you give me groceries. I give you $100, you give me back groceries worth of $100. So you will not be giving me more worth of $100, or you're not going to charge me anything extra as an interest like the loans or mortgages that we do. So you're permitted to do the trade, but not with interest. So this one verse defines the entire philosophy of Islamic finance. It means money cannot just generate profit by itself, but it must be tied to a real trade, a real asset, and the risk should be shared as profits are getting shared. That's the basic and simple idea of Islamic finance. Let's go a little deeper, and I'll make it more simple. So in the conventional system that we are in today, if I lend you $10,000, I can charge 10% or more. Let's keep it 10% interest, whether you profit or you fail. That doesn't matter for me, but I need 10% interest for the $10,000 that's been given out. But in Islamic finance, I invest $10,000 with you as a partner. In a partnership, we invest $10,000, and if we make profit, we share it. That's how everyone does it these days. But few have got a specific percentage or specific amount that would be shared. But here, no. Islamic finance will let you share the profits equally. So if there is a loss, we share that too, as per the Islamic finance, but not in the conventional system that we follow. So that's a risk sharing, and it's key Islamic principle of fairness. Everyone are treated equally. So Islamic finance also rooted in amana, that's trust. Everything we own is actually a trust from Allah, and we will be accountable for how we earn, spend, and we share it, right? So that's a fair view of the fundamentals. Now let's talk about the Islamic view on the technical side. So how is Islamic finance operates in the real world? Instead of interest, it uses Sharia-compliant contracts that encourage real trade and asset ownership. So I'll give you a few examples, taking those keywords of Islam that's used as a terminology in the world of finance. The first one is murabaha, which means cost plus and sale, which means cost is nothing but the cost of value of an asset plus you're increasing. Sale is just you're pushing it out. So imagine you want to buy a car. The Islamic bank buys it for you and then sells the same car at a slightly higher price, with full transparency about the cost and the profits. So this replaces interest based on a loan with a fair asset-backed state. You want a car, you will get that, but not for the X amount. The X amount would be changed to XX amount. So that XX would be a profit for the bank as per the Islamic way, which is called as murabaha. Okay, so the second point is also quite similar, which is mudarabaha. Murabaha was the first one. The second one is mudarabaha, which means investment partnership. We have these partnership deeds, partnership firm, but we see in the daily life. So let's say you provide the capital, and someone else provides skill and management. Yeah, so you have one particular thing which is capital. I have got skills and management thing. So we both get together, yeah, and we do something about it. And if we gain profits, the profits are shared. If a mutual consent that we both agree, or 10-20 or 50-50, 40-60, something like that, based on that, as a mutual consent we share the profits. What if there's a loss? It's a partnership thing, right? So if there is a loss, the investor bears it unless it's due to negligence. Yeah, so note it down. Yeah, the investor bears the loss unless it's due to negligence. If it's like a venture capital, yeah, if it is a venture capital, it should still be with the ethical boundaries. All right, so when I say investor, there are two people, right? The one with the skill and management, and the other one was the capital. So both are investors and both are bearing the loss. The third point that we're going to highlight today is musharaka, which is the joint partnership. So here was the investment partnership. So both are investing. One is investing the skill and one is investing capital. So now the third point that we are talking about is joint partnership, which is called as musharaka. So both parties invest money. You see, investing money. Both the parties are what? Investing money. It's only about money. And sharing the profits and the losses. So the previous thing did share both things. Here also, we're sharing both the things, profit as well as the loss. It's often used for property and business ventures, similar to equity financing, your real estate and others, but without speculation. Yeah, you have a partnership firm, you do on a real thing, yeah, but without any sort of speculation like you know what speculation is, like lotteries, uncertainty, something which you're gonna do a betting on a cricket match or football match. These all are uncertain things which comes under speculation. Yeah. So this is the third point, and the fourth point that I'm gonna list out is ijara, which means leasing. So this works like a rent. Let's say the conventional banking, if you happen to buy a home, you go for mortgages, you go for loans, you pay interest on it. That's a conventional system. But Islam doesn't work like that. This works like a rent for you. A bank buys an asset, let's say a home, and leases it to you for a fixed period, 5 years, 10 years, 15, 20. And you pay a rent and sometimes have option to buy it later. Okay, that's how the leasing is. So you go on rent, yeah, you stay there. So if you have seen many influencers, finance influencers of the conventional system, do give you these tips that you go on a rent on a home for a few days, you stay there for a couple of days, couple of months, couple of years, then you own the same property and name it on your own. So that's something like ijara. So sukuk is the fifth point that I would like to bring it up. Sukuk is like an Islamic bond. We have the gold bonds, equity bonds, lots of bonds, mutual funds, and all those kind of thing in this conventional system. So Islam also has that, which is called as sukuk. Instead of lending money and earning interest on that. So if you happen to go for a gold bond, you pay an amount and you wait for a certain period, and when you go back and stop your investment, you get that interest for the amount that you have invested over a period of time. Right. Similarly, instead of you getting that interest, sukuk holders, yeah, the bond holders own a share in a real asset of the project. Yeah, you have a project of building a house or building a company or whatever it is. So you hold a share in that particular thing. So the return comes from real performance, not speculation. So the performance is what fetches you resolution, fetches you the real money. Yeah, not speculation. Even countries like UK, Malaysia, and all those, they issue sukuk today. If you happen to get a chance to check on that, do Google it, you would be definitely getting those solutions there. So showing you how global this ethical system has become. Even the 2008 crisis, you may just go ahead and have a check on that. You would get a brief info or how strong or how sustainable Islamic finance is. So let's put a spotlight on the bigger picture. The ethics and purpose. So the ethics and purpose. So Islamic finance is just not only limited for Muslims, it's open for the entire humanity. It's about building a financial world that values humanity, honesty, and fairness, provided that it forbids interest, exploiting others through guaranteed gain, Gharar, that's uncertainty and speculation like gambling, betting and all such things, and haram industries like alcohol, weapons, adult entertainment. And it also encourages zakat, that's wealth purification, helping those in need. Charity is what we call these days. Transparency is like no hidden terms or deception. It's open and clear. So, like I said, the 2008 global financial crisis, where many Islamic banks were much stable, as per the research that I did. Yeah, basically, just a Google search would also tell you that it was, yeah, very much stable because of their economic thing, or the values that they were depending on the real assets, but not based on speculations. That's a practical example of how this system promotes sustainability. Yeah. So I'll conclude my video here for now. So the Islamic finance is not just an ancient concept or limited to a certain religion or a certain caste or something. It's wide open for the entire humanity. It's a timeless system of justice, transparency, shared prosperity. It teaches that money should serve humanity, not dominate it. Remember that it should be a service to a humanity, not just dominating what we do it these days. So in the next video, inshallah, we'll explore one of the most topics, that's riba, which I also mentioned in my previous video. So the next video would be on interest and why does Islam forbid it so strictly and asks to avoid riba. We'll have a small view about that as well. Until then, may Allah bless you all with a very good and a halal wealth. Jazakallah.